Folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond, and what we're going to talk about today, our top 5 picks for the new trading week. We're going to talk about Netflix. We're going to talk about Qualcomm. We're going to talk about NXPI. We're going to talk about Adobe. We're going to talk about natural gas, which has been getting beat up recently, and that's why we like it. We're also going to talk about our performance last week. How did we do? Well, if you go over to thecontrariantrader.com, you can check in at any time. Scroll down, and towards the low end of the page, you'll see our recent trades. And last week, we booked profits on Tesla long, and we also booked profits on Tesla short. We're indifferent. We don't care about the direction of a stock. All we care about is the setup. Does it appear ready to fall? Does it look ready to rise? That's all that matters to us. And how do we do that? We use the charts. And you could also click on this link here, and the chart opens up for you. So you can see that our common stock trades, we had a good week last week, but that really doesn't explain our complete performance last week. And what is not reflected on recent trades are our options trades. We did a short of the triple Qs intra-week. We did a short of mRNA, Moderna. And we also traded Netflix on earnings, and we booked profits there. And lastly, we had an options trade open on Tesla. We saw those options expire worthless. Why is that a good thing? Well, we were selling premium. We were the casino and not the gambler. And that is part of our cash flow strategy, selling premium. So if you're not currently a member, sign up, become a member, 14-day free trial offer. And before we get into best stock charts for the new trading week, don't forget that tomorrow night is our live stream on YouTube and Twitter. We go live 6 p.m. Eastern Standard Time on Sunday evenings to go over the opening price action of the futures markets. We talk about the headline news and the scheduled economic data that will be released the coming week, and those items can influence the overall markets. So please join us Sunday nights, Thursday nights, again, 6 p.m. Eastern Standard Time. And I would encourage you to take advantage of my 5-part video tutorial of my top 5 favorite candlestick patterns. It is free and it is linked below. And you'll also get alerted as to when we go live 15 minutes to a half hour prior to our live streams. So let's get to it. We're going to begin with Netflix, NFLX. Now, for the purposes of this conversation, we're going to be going over the weekly charts of our best stock charts for the new trading week, perhaps even the monthly charts. But for our strategy of entering these trades, we're going to be going over strategy with members on the week ahead commentary, which is going to be posted later on today, which is Saturday, January the 21st, on the week ahead commentary. So members, for a deep dive into the stocks we're about to talk about, don't forget to check out our strategy in the week ahead commentary, and I'll publish entry points, exit points, stop loss points as well. So let's get to it. Netflix earnings last week, and earnings were not wonderful. In fact, if you take a look at their fundamentals on Investors Business Daily, you'll see that Netflix is more expensive now than when it was the day it reported earnings. Why is that? Well, earnings dropped. The PE on Netflix was around 28, and now it is around 34 post earnings. They beat on revenues slightly, and they missed on EPS. They were rewarded due to the fact that their subscriber growth grew. Does the significant move higher on Friday make sense to me? No, and it doesn't have to. The markets are speaking. All we're here to do is to identify the setup. Are we poised to move up higher, or are we poised to stall out and proceed lower? When I look at the weekly chart of Netflix, it appears as though the shares want to move up higher. You can see that we've had a very strong, and by the way, we're using TrendSpider. TrendSpider is the sponsor of this show, and help us out. One of our videos live streams got demonetized. I'll share it tomorrow night on the live stream by YouTube because we dared talk about the Matrix and the World Economic Forum and Bill Gates, the lizard people. Back to Netflix. You can see that we've been doing some really good stair-step action, meaning rally, consolidate, breakout. Rally, consolidate, breakout. So it's a pretty healthy chart on a weekly time frame. Now, longer term, am I macro bullish in the long term? No, I actually think that we're probably going to be shorting Netflix in the coming weeks. But in the short term, it appears as though there's more upside to be had. Where might we be shorting? Right up here. I'm going to use the automated trend lines on TrendSpider. Click of a button. Bam. Right up here, if in fact we get up to around 372 per share. So you could see that short term, bullish. Longer term, overhead supply above. And if you take a look at a monthly chart, you can see that so far on the month, we have a clean breakout. Remember, we're only just over halfway through the month. Could this fade? Sure. But right now it looks strong. And we're going to have resistance up here, right at this lower band of prior support at around 378 per share. So while Netflix, the path of least resistance right now remains to the upside, there's going to be a brick wall of selling up and around the mid to low 370 area. So members, stick around. We will be talking more about entry points, exit points, and stop loss points on Netflix today on the week ahead commentary. And of course, we're going to visit when we decide to short Netflix in the coming weeks. The next chart up, this is a monthly chart of Qualcomm, and you can see that Qualcomm has just been trading sideways since the summer. And rule number one for when we want to enter a trade that is either a stock or an ETF or whatever we're trading cupcakes, it doesn't matter. The rule is that you first must stop going down. And we have stopped going down. We've been consolidating. And as I always like to say, the longer the consolidation, the greater the validation of a breakdown or a breakout. And I think that we're poised for a breakout on Qualcomm. And what we're going to be looking at is a breakout above this resistance level, in this case on a monthly time frame. And right now, at this snapshot in time, we are above monthly resistance. Do we close there? We're not quite sure. So how do we leg into this trade? Well, we leg into the trade by keeping an open mind that while the shares are strong, they could certainly fade. And the one thing that we can control in any trade is the size of our position. So until such time as we know that we have a monthly breakout on Qualcomm, we're going to remain very small with the trade, weekly chart. Now, on the week last week, you could see that we broke out significantly above that upper band of resistance, but we closed right up and into another resistance level. So I think that we're probably going to get a pullback this coming week, and that pullback will provide us an entry opportunity on Qualcomm. So members, again, check out the week ahead commentary coming out later today, and we will talk about our strategy, exit points, stop loss points, and price targets on Qualcomm. Stochastics weekly time frame rising, bullish. The next chart up, NXPI, another semi name that has been in a long-term consolidation since late spring, summer, fall, now winter, and it's looking very attractive, and it looks as though it's getting ready to move up higher. So this is our 100,000-foot view of the battlefield. And as I mentioned with Qualcomm, we have stopped going down. We are in a trading range, but before we get big on this trade, we want to make sure that we have a monthly breakout. And you can see that at one point in time this month, we were higher, but now we have faded off the highs of the month. Does that dissuade us? No, not at all. What we want to do is we want to take our crayon out, and we want to use the tools at our disposal, such as the automated trendline features, and we want to identify where we have overhead supply and where we have support. And you can see that we have support immediately below. We tapped it and it held. That is a very bullish event. Also, resistance. We have resistance immediately above. Let's identify it. And where do we get some sellers? Right at that upper band of resistance that I just drew. So the market is telling us, hey, you have sellers above. Beware. Use caution. The market sends you signals, and if you choose to ignore the signals by the market, you're missing out on opportunities or you're taking on too much risk. Weekly chart. Now on a weekly time frame, spinning top formation on the week last week. I don't see a urgent need to go running in on Monday morning and jumping in with both feet on NXPI, we certainly want to leg in. So we're going to be talking about entry points, exit points, stop loss points later on the week ahead commentary. Members, go check it out. But we do have very good support immediately below at, let's call it 166.50, and resistance up here at around 172 per share. So that's your trading range. Weekly stochastics are rising. What do they mean? It means that you have momentum, which is gaining steam. So NXPI bullish. The next chart we want to talk about is Adobe. Now you may be saying, wait a minute, I don't have the money in my account to be buying a $350 stock. Well, you don't need to. There are strategies that you could employ. One of my favorites is a bull call spread, which is where you buy a deep in the money call option and you sell a deep out of the money call option, which helps to finance the trade. Because I, in all probability, will not be buying Adobe common stock. I'll probably be using an option strategy. Now, on a monthly time frame, this is a good looking chart so far on the month with a bullish key reversal bar. I am not going to ignore the fact that we have not had a pullback and a higher low put in on Adobe. That may not happen. But what I will do is memorialize what I'm seeing here, which is a potential, not a definite, but a potential bear flag setup, as noted by these lines in black. Now, if nothing else, this upper band of resistance here shows me that I have some sellers up there in all probability, because guys like me are drawing similar lines and they're making similar observations. So that becomes a natural resistance area. Stochastics, they've bottomed out. We have a W formation forming and are now beginning to rise. So you're seeing momentum begin to build on Adobe. Weekly view. Now, the weekly chart is awesome. We broke out above this upper band of resistance, traded sideways last week, continuation breakout pattern on Adobe. A very strong chart, and members will do a deeper dive on Adobe and our strategy for entering this trade, exiting the trade, and what our price targets are on it on the week ahead commentary. Now, the next chart we're going to go over is UNG, U.S. Natural Gas ETF. I have no intention of trading UNG per se. I plan on trading BOIL, which is a leveraged ETF putting you long of natural gas. And for transparency, we do have an open position on, actually two, on BOIL, a naked put, and we're underwater on that trade. We sold the 1250 puts. Why am I not panicking about it? Because we stayed small. We have control over one thing in the markets, and that is our position sizing. So we stayed small. And last week we did open up a bull call spread on BOIL. Will we add more? In all probability, yes. Why am I not using the chart of BOIL? Because UNG is a cleaner chart relative to a leveraged ETF, which is a little bit more noisy. So you can see on this monthly chart that UNG has just been getting absolutely annihilated. In fact, we are now below, and significantly so, well below the lows of February of last year when we had the invasion of the Ukraine. And that was right back here. Now, there was a lot of damage done last week, and it appears as though, in all probability, we could see new lower lows as we proceed into the new trading week. We have broken through significant support levels, but the month is not over yet. So we can't draw the conclusion that we're going to close out the month at the lows of the month. In fact, I think that we're going to rally and we're going to hold these support levels in the coming days. Where might we bottom? Well, we could hit support last seen back here in April of 2021 when we hit a low of $9.04 on UNG. And look at how long that acted as a support level. So we need to make the assumption that that support level will hold, but it's also an equal assumption that in all probability we are going to hit that support level. So simply because I'm talking about it this week does not mean we should be running in on Monday morning and buying UNG or BOIL, whatever you feel comfortable with. It just means that, you know what, everybody hates natural gas right now. And as a contrarian, I find that extremely attractive. And we begin looking at these positions or potential positions when there is blood in the streets. Because again, nobody wants them, and it sets the stage for a massive, massive counter trend rally on UNG. Are we going back to new all-time highs anytime soon? No, definitely not. Will there be a rip your face off short squeeze? In all probability, yes, but we need to hit support levels first. Drilling down, pardon the pun, drilling down to a weekly chart, you could see that we have resistance above because we broke down below support at around $10.40 last week. And the next support level to get tested is at around $9.20 per share. Now, looking at shares of Boyle, weekly view, you could see that we broke down below this line in blue. You might not be able to see it clearly. Let's zoom in. There you go. We broke down below the VWAP, the volume weighted moving average, last week. So not a good close on the week. And in fact, I'll make the argument that we have stiff resistance up at $14.32. So we know that that $14.32 mark, we're going to see sellers above. Might we sell into that resistance level? Yeah, we probably will. So members, stay tuned. We're going to talk more about Boyle on the week ahead commentary coming out later today. And folks, if you got any value out of this commentary, please click the like and subscribe button. Support the channel because we continue to get shadow banned and demonetized on our live streams from YouTube, which is very disappointing. I happen to like YouTube a lot, but they have an agenda, and that agenda does not align with ours at times. If you enjoy the automated technical analysis that TrendSpider provides, head on over, take a look at their website, explore the product and all the functionality they have to offer. And I'll tell you, every time I come to this website, there is more and more functionality they add on, and they don't increase the price. They have a 7-day free trial offer, and in fact, I believe in it so much, I give it away free to our silver and gold level members. And if you're not ready to become a member, that's fine. Take advantage of their 7-day free trial offer, and you can see what value that we're giving away at the Contrarian Trader, because their advanced, elite, and premium memberships, well, frankly, the savings that you realize pays for your membership to the Contrarian Trader. So I think it's a no-brainer. Folks, have an awesome, awesome weekend. Members, I'll talk to you later on the week ahead commentary. And don't forget to join us tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time on YouTube and Twitter. Like, subscribe, and have a profitable trading week. Be well.